Okay, we're ready for 12. Drum roll, please. This is the entire, everything you've been working on here. You're going to do a worksheet. Then you're going to do, post to the, do the journal entries. And 14 you're not going to have to do, so you should jump up and down. That was T accounts. But we're going to do closing. You're going to do adjustings here, okay? Then you're going to do the closing entries. So you're going to do, and you're going to do a worksheet. So this is everything you've been building up to at this point. So this kind of is like the capstone of your first 4 chapters of accounting. So let's get started. We're going to look at adjustments, and the first thing you got to look at is it says accrued service revenue, and you go, what's that? Well, that means that they've done work and they haven't recorded it. So first of all, we know we want to increase our revenue by $400. So we would go right here with it, with $400. And that actually gets put into or charged to accounts receivable. That increases your accounts receivable. So you actually record that. You have depreciation expense. So you find depreciation expense here somewhere. And depreciation expense has what kind of a balance? It has a debit balance. So we're going to debit it. What's the corresponding account for that? You're going to increase your accumulated depreciation, right? Because that becomes part of figuring the book value. So you have that. Now, accrued salaries expense. That means that you have you owe money to your workers that has not been recorded yet, and you want to get that expense into this accounting period. So you find salaries expense. Again, salaries expense is an expense and it has a debit balance. Accounts payable? No. Salaries payable. How's that? So you should, that's balanced. Prepaid rent expired, $500. Well, that means this needs to be $500 lower, and the rent expense needs to be $500. So yeah, $500 increased by $500, and you want to decrease it because that's no longer a prepaid, it's been expensed. And finally, you use $300 worth of your salaries expense. So that increases $300 here, and we want to lower the supplies by $300. That sets you up. If all of those correct, you should add up to $2,400. You're ready to take these and adjust them. So accounts receivable increased, right, by $400, so that becomes $3,900. And you'll just go across the board and make sure it adds up to $51,500. And then after that, you'll make sure that balances. Once that balances, pull off your income statement accounts and pull off your balance sheet accounts. And then you should be able to answer the question, what is net income? From there, you're going to make the adjustments, make your adjusting entries, which would be these right here. And that should be fairly simple now that we've laid this out. And then you're going to do your closings. Again, try that on your own. Make T accounts, if that will help you. But message me so I can help you. If I need to, we can do a video talk or whatever. See if you can do this on your own. I will tell you, let's see, you need a check figure. Well, you have check figures up here. If you can get these right, you can get these right. Okay? Would you like the net income check figure? It's $4,000. So that net income should fall into right here. I guess I gave it to you. I gave you net income. That was nice of me. And that is all there is. So, get to this point, do these, message me if you need help, and we've done or completed or have experienced the entire accounting cycle now. Good job.